per usual, everything on this channel is for educational purposes only. It is not intended as financial advice. It is Sunday. That means it's Setup Sunday. Last week we had several entrants in the spot Bitcoin ETF race. Many of them said to the SEC on paper, we have a surveillance sharing agreement. And the SEC came back and basically said, okay, name the exchange. Most of them, if not all of them at this point, have named Coinbase as a partner. So for me, this sets up a massive binary trading event for Coinbase. Either these ETF applications are going to get denied based on the basis of using Coinbase as the SSA, or Coinbase is potentially seen or unseen as undervalued and price will move around that. Now, that's not why I'm bullish on the Coinbase chart. This is just adding a news-driven event for something that I'll talk about in a second. I don't think the SEC is going to come this week and say anything. It's a holiday week, but hey, maybe I could be wrong. Maybe they'll come out at the end of the week. Something else worth knowing if you don't already know, there's a 4% reward on USDC on Coinbase, and yet there's still USDC flying out the door, okay? USDC continues to get redeemed. They cannot incentivize people hard enough to hold on to this stuff. So for me, there's a major, again, rates and regulatory shift, potentially sentiment shift, potentially as far as a chart to watch just continuously. If we start to see USDC mints again, that is a different environment than we're seeing now because we've seen months and months and months of redeems. And it's not because Circle's reserves are in question, okay? After the SVB fiasco, they've basically moved everything to BlackRock. Yeah, that BlackRock. So BlackRock is handling their reserves. And you can see exactly what's in it as far as RRP or repurchase, paper, debt, whatever, US Treasuries. It's totally fine. Okay, so at least in my eyes, who am I? But I don't think there's any issues there. And they're getting, 5%. So they're netting out 1% yield before fees to BlackRock. But in any event, USDC continues to melt like a snow cone in July, baby. This thing just cannot hold on to any market share whatsoever. Again, because of the hostility towards regulatory stablecoin stuff in the United States. That's another news event-driven thing. I don't think we're going to see it this week, but it's something to always consider if we get some sort of regulatory clarity on USDC. So I'd consider USDC like a made man. I'd consider Coinbase a made man. I think they're going to end up okay. I think BlackRock's going to persuade them and use their influence, putting on my tinfoil hat here, to make sure things are okay for Coinbase and USDC. So I think it's only a matter of time. But right now it's just down only. And this helps me form my lens. Again, do alts matter? Should I care? No, I shouldn't. Another proxy for retail speculation was USDC. That isn't to say will be again in the future, but it certainly has been almost a one-to-one correlation as far as stablecoin circulating supply versus prices, right? The tether truthers like to point to the Bitcoin price reactions when in reality, stablecoins benefit alts benefit far more than Bitcoin on stablecoin circulating supply. So another metric to add to your buffet, okay? This is the Coinbase chart. And again, I can't remember if I talked about this last week, but I put it up on TradingView. It's got inverted head and shoulders chart pattern. Volume is a mess. I don't care. It's got cloud on its side. This is a higher time frame cloud. This is the default doubled cloud. This isn't the crypto cloud. And I'm very, very confident that this thing will attempt to move above 82. At the very least, I like a move to the yearly pivot. So I'm still very bullish on the chart. I think the exchange is one thing, but the chart and the possibilities and the connections are something else completely, entirely different. As far as Bitcoin dominance, again, it's not going to move up in a straight line. It's done pretty well week over week here. It's about 50% still. There was some interesting speculative moves, I guess, last week in alts as Bitcoin went sideways, as what usually happens. People are always looking for the next trade, and they find it in the illiquid altcoin market. So we did have some bounces across the board. Bitcoin Cash was up like 200%, Litecoin up 25% at least, if not more. So there was definitely some non-Bitcoin activity, and you're seeing that in dominance here. I still think this keeps going eventually here. Total 3 would is what I talked about in the altcoin video, is the entire market minus Bitcoin minus ETH, and then I take out Tether, I take out USDC market cap, and I take out wrapped Bitcoin. And again, it did bounce quite a bit. Instead of looking at alts individually, I just like to look at stuff like this because, I don't really care individually per se most of the time. And this is still ranging. It doesn't look like anything I want to trade just yet. Something that does look really good still, somebody gave me crap for this rightfully. They said it's not above cloud yet. Why would you buy it? In the comments, somebody was saying. And you're right? I'm 1906. That's my entry. I'm confident enough in this chart pattern, just like I am in coin, right? I'm confident enough in this. I don't care what the cloud says. This setup, this multi-month setup over a year long, to me looks fine. The SEC stuff got brought to light. It may take years to resolve. I don't know, right? I'm not even bullish on the resolution of that, but this chart looks good, as does ETH here. Above 2K, the party gets started. Definitely. This is the 3-day chart. These are the crypto cloud settings. And it measures to, 3K. Let's just round it, say 3K. Unlike Coinbase, the volume here looks phenomenal still. So I'll probably talk about this next week, probably the week after. But ETH tends to do better historically in Q3 and Q4. That's, I think, unless I have that backwards, that's where it shines. Well, scratch that. I just checked on a second monitor. No, it doesn't. ETHBTC, let's flashbang everybody, sure. So ETHBTC historically, has always had a red Q4 aside from last 2 years, it looks like. And ETHBTC generally does better Q1, Q2, and there's the clear, first half year performance relative to the second half year. But hey, I still like the chart. And here's Bitcoin, just in case you want to see it. We typically have a muted Q3 relative to Q2, Q4. Anyway, I still like the chart. ETHBTC still looks like a mess, but ETHUSD will slowly start to creep up because I'm extremely bullish on Bitcoin still. And I think ETH is going to catch up eventually. I just really like how that chart setup looks. One thing I can finally talk about, because I'm not working for Valkyrie anymore, is WGMI. We had another ETF become public last week, tradable BITX. It's a 2x Bitcoin futures based on the CME futures prices. WGMI is a Bitcoin miners ETF, and that arguably also is sort of a leveraged Bitcoin play, something to look at and maybe have fun with. Here's Bitcoin in the orange versus WGMI. Certainly had an outsized down move relative to spot Bitcoin. And, I've compared this to like gold and gold miners, Bitcoin and Bitcoin miners, to see like what the differences are. And there are, higher beta environments for things like gold miners relative to miners. But just looking at WGMI on a chart, there's a few interesting things going on. The volume, that's the first thing that's always stuck out to me, is incredible, because leading into the end of the year, we had, we were just dead on the side of the road, flies buzzing, hair sticking to itself, right? just dead completely. Look at this volume. Look at this price. This looked like Zcash on a good day. Okay. And then comes the year old Lang Syne 2023. And it's a new market, baby. And this thing just goes absolutely wild. And it's still the highest, best performing ETF year to date in the country, which is just wild. But this still looks okay. It does have just a continuous bear div on it. It does have the potential for a rising wedge. It also is, interestingly enough, sort of grinding into the 50% retracement of that down move around 1650. So trend-wise, it looks okay. But again, if you're looking for interesting, Bitcoin plays around non-Bitcoin specifically, this is a fun one. Now, as for Bitcoin spot, like I said, it still looks good. It's still above the cloud on the daily. It's above the yearly pivot. The deepest retracement where you'd want to buy this based on the cloud would be 28. I don't even think RSI got high enough yet to make a bear div on any higher high. I think any higher high is actually going to pull RSI up. So that's a good sign. Unlike the S&P, which is setting itself up for a bear div this week. I'll cover that tomorrow. But this is still recovering from that falling wedge, head and shoulders, cloud move, whatever. Like all that stuff is just getting wiped away still. And we're just chilling up here above 30. And that's another important level for the week, is that 30K level. We, even in the face of, non-news news as far as the BlackRock denial, I think that's how the algos read it, which wasn't actually a denial, it was just SEC wanting more information. But anyway, we still held above 30. I think things look okay. Just using that as a litmus test by itself. Slapping on the pitchfork, again, still looks fine. Measuring out the falling wedge to its target would be 35 to 37. So if we get another move up here on BTC land, I do think we will see that move on ETH above 2K, sort of lagging a little bit. But, ETH BTC is going to get dragged down. BTC's spot is going to move up. And then ETH USD is going to come to some sort of equilibrium and move above 2K. That's how I'd assume this week plays out. Now, it may take 2 weeks because it's a holiday week, people are gone, whatever, I don't know, but still looks okay. And more importantly, we're above 25. That really is like, this is consolidation doomland, failed experiment territory, whereas right now we're just fueling the rocket for 250K in 2025, a year post-halving. So we're definitely not printing anything that looks remotely bearish yet. You could argue this is a high and tight flag, in this case a bull flag. There are kind of other different types of examples of this. This is a historic chart, 2015 oil. I wouldn't quite call this a high and tight flag, but maybe people did at the time. If anything, this was a, bearish dead cat bounce, maybe-ish type thing, right? We're not bouncing on a flag on like a bearish trend generally, right? So this was oil 2-day. Whenever I think of high and tight versus diamond top or something, I always think about this exact time on the oil chart. And this was on the weekly, and you just see doji, right? Just complete equilibrium for weeks on this chart. Indecision, this is the perfect price, 59, okay? And then you get a range break, and that was it. Then you had 8 weeks of just disaster momentum, which I think was fueled by oversupply at that time. I'm not really an oil trader. I don't really know my oil history, but that's likely what happened here. Anyway, I don't think we're setting ourselves up for something like this, but it's sort of the nightmare fuel I have in the back of my head when I'm talking about high and tight or some sort of doji party diamond top situation. There's a lower time frame case for a megaphone, which I'll get to in a second. This is the 250K by 2025 case. This is Power Law Corridor. It was created about here, I think. It was using all this data to sort of project the channel forward. And we continue to look completely fine for a long term, like we were in 2015, 2016, 2017, long-term move towards the top end of this, right? Doesn't mean we'll hit it exactly. That's okay. But currently it's at 250K on the top end, and that's going to keep moving up slowly but surely over the next couple of years here. This is the megaphone on the 1 hour. You kind of have to move down. This was the SEC non-news news that algos probably freaked out about. Anytime you have a megaphone or diamond, it's always a good idea to also just set sort of midline just to get a sense of, bullish bias versus bearish bias. One other thing when we're talking about, triangles especially, you want multiple hit points. It doesn't really look as good if you don't, right? And therefore the confidence should go down. If I pull up the ETH BTC diamond, right, it's kind of there. It's kind of missing a big chunk. It's not perfect, but I think it's probably good enough to be a diamond here on ETH BTC. But anyway, we do still have this megaphone type thing. So what you don't want to see is a test of 31 and then a denial, right? Because then we just continue to fill in this megaphone and we don't actually resolve. Bullish resolution 32.33, bearish resolution 27.28. Again, this is where the cloud support is down there. So I know this says up or down, but that's just where we're at. Alternatively, you could just draw a horizontal line on this puppy at 31 and call it a day, and then use it as some sort of breakout trade. I don't think there's any pattern here specifically, but there is that, high and tight is what I'd call it, flag on the daily. Weekly cloud also looks really good from a edge-to-edge perspective. Now, the risk return trader in me would actually want this to come back down to 27, but it still looks fine for 42 eventually until we're below the Kijun, or we have a bearish TK cross, which we aren't even close on any of that stuff. This looks completely fine for an attempt at 42. So that's also very good news. And if this high and tight flag breaks up, that triggers momentum towards an attempt at 42. Again, doesn't happen in a straight line, right? There's plenty of examples of that, but what you do often see is a retest of the Kijun potentially if we lose momentum inside the cloud. So that's weeks away. That's into probably Q4, but 42 is definitely on the table. And then just to wrap things up, I want to talk about GBTC and ETH real quick. GBTC saw some major volatility last week on some decent volume. GBTC is Grayscale's product. It's discounted. It's where most people who know about it would probably pick up Bitcoin because of the discount. And if they're trying to sort of front run BlackRock's ETF or any spot ETF, this is where you'd probably want to do it. Previously, we had bearish momentum with a growing discount. We had, 3AC threatening to dump it on the market. We had Barry trying to save this thing. We had all sorts of stuff going on. Now we have Grayscale assuring the public that they're going to try to convert this puppy. We'll see. But anyway, on the flip side, now we have sort of a road to success, right? A road to eventual, maybe potentially spot conversion. I don't know. But that certainly helped this chart over the past week or two. And it still looks good for a move, in this gap somewhere around the 20s. That's certainly possible this week. These are the Grayscale products on CoinGlass. You can see the premium, in this case, the discounts, the negative, the red values. And I think even ETC was moving last week. As you go down this list, the volume, the liquidity dries up substantially. So keep that in mind. And, some of these still have a crazy premium. But the two main ones are definitely Bitcoin and Ethereum. And on the Bitcoin product discount, it did continue to recover. And now it's in the 30% range. ETH still, struggling in the 40 to 50% range. One thing I mentioned Friday as well is if Grayscale comes out and says, hey, we're going to try to fix this non-staking issue and try to stake the ETH, that would also probably move the needle on the discount here somewhat in the positive direction. Then last thing I'll just say is, of course, Elon breaks Twitter the day after I do a video on TweetDeck. So hopefully TweetDeck works in the next couple of weeks and everybody can bask in the glory of lists on Twitter the way they were meant to be. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.